Right, everyone. Hello. What a day to do all this. So this will be fun. As always, my name is Michael Nauss from statsedgetrading.com. I'm a CMT, so I look at the charts all the time. I'm also a quantitative trader, so you might hear me talk about a lot of quant stuff. But without further ado, that's enough about me. Let's get in. It's a wild, wild day. Let's grab the right screen, which is this one. Perfect. Cool. There we go. So first of all, I guess if this is the first thing that you've noticed in the market today, we gapped down a little bit today, and we've gapped down a little bit across the board. So the logic or the reason that I was hearing for this is that whole DeepSeek thing with China building an AI for way cheaper than they were doing in the States. I don't know how much even I want to follow all that stuff because you've got to trust that China's right on that they're telling you the truth on how much they made and all that, or how much it costs and all that. So that's why, as CMTs, we're focused on the price action and what does that mean, and what does the price action tell us, and what does it actually look like. So, first of all, I think one of the biggest things out there is just to notice is kind of what's happened so far today. So this daily chart of the SPY actually includes pre and post market. It's something that this charting platform. One of the reasons that I really like it. Right, this is just the regular trading hours on this day, this candle. But if I click on this button, this is the pre-market. So we were down big for a second there in the pre-market, and we can see that if we just go to a 30-minute chart or something. We were all the way down to 589. If we go to the Qs, it was down like 6%. At one point, I think off the open at 502. But then when we go into the daily chart, you can see a lot of these things are starting to bounce, right? So we were really, really scary, I guess, in the morning as people were overreacting. But one thing that's always important to note is that the institutions, the big guys out there, they're not trading Sunday night and making their big decisions there. They're waiting for the market to open. They need that liquidity. They need the opening liquidity to place orders. They can't place orders in these really illiquid times. So what happens is in the pre and the post market, you have basically people trying to make bets and trying to move price on where they think they should go. But it's not until the big guys actually step in that you see what's going to occur. So in both cases, in the SPY and the IWM, or sorry, the SPY and the Qs, we got a lot of buying coming in. Not only in the pre market, but then right off the open. So if we go to a 5-minute chart, let me remove a lot of things to kind of clean this up for you guys. Remove all annotations. Okay. And then we'll take these two off as well. This candle right here, this is the 5-minute opening candle. So the market opened and just ripped, right? So we ripped to new highs right off that opening print. And ever since then, we've just kind of been basing sideways. So not only did the pre-market look very, very good to have that kind of opening rip, but we're also seeing that for the rest of the day. So the pre-market and then the open. The reason I point that out is because when a news event like this occurs, what people are looking for, especially technicians, and the reason we focus on chart is not because there's some magic chart pattern with a doji crossing a swan and the lizard. Like none of this stuff, pure technicians are really too concerned with. It's just kind of trying to figure out the sentiment of the stock, the sentiment of what it is that we're looking at. And in my opinion, right, if you have the pre-market getting bought up and then you have it during the day also getting bought up, that to me is bullish sentiment. It means that people came in and they started to buy stocks strongly. And so because what we're looking for is we're looking to say with the institutions is okay, it's gapping down. There's two things that could kind of occur based off that gap down. One is that people go, oh no, this DeepSeek thing is real, and I should be worried, and I should sell some stocks. Right? You're going to see that right off the open. You're going to see those things sell. The other thing is that you're going to have the opposite occur, or potentially have the opposite occur, in which if people come in and they go, oh great, the market's gapping down. I can buy, right? I missed some of this move, which is what a lot of people forget, right? Is that just a couple weeks ago, we were down here 2 weeks ago, less than 2 weeks ago, and then we just rallied a pretty massive percent. We went up 6.5, 7% in just a number of days, pretty much in a straight line. So then we pull back 2%, and everyone loses their mind. So first of all, if you have anyone like that you're following that was just keeping their mouth shut the entire 7% rip in 2 weeks, and then all of a sudden became very, very loud about they were right to be bearish today. That's probably not someone you want to follow too closely. But again, what we're seeing is this kind of push off the open, and people are using this opportunity, which in my mind, if we end up closing like this, it's very important to see what the market will close like. I think that's pretty much everything. Um, if we see this kind of rally into the close, or even if we close right where we are right here, the way I look at that is to say, okay, they were very much interested in buying when the market came on sale. There was a bunch of bargain hunters in there that they hit the buy button, they hit it hard, rallied us up out of being down again 6% on the Qs and all of that. So it looks good so far, but again, we need to see some continuation. Another couple things that were very interesting to me was more looking at the other not large cap names, right? So remember, the S&P 500 is your big guys out there. It's really dominated by mega caps and big cap techs. But we looked at IWM, even though we're down a little bit today. At one point today, it's only down 0.69% as opposed to the overall market that is down. Um, 1.5, and then I think the Qs are down 3. So small caps doing okay, and then not only small caps doing okay, but we're green at one point today. So we'll go to the intraday chart there, and we were pulling back quite a bit here. But if we look at the chart, we were green on small caps. So this is just kind of showing us that it's not so much the whole market sold off. It's that the headline indexes that most people look at, the S&P 500 and the Qs, are very dominated by AI plays right now. If you look at NVIDIA, Apple, Meta, Google, all of those things, they are dominating these two indices. So the fact that the small caps were able to go green for a second there today, where there's blood on the streets with the rest of these names, that's one of those things that's super, super interesting to me, just showing that there's some rotation. So what people are doing is they are selling some of the AI names. If we take a look at NVIDIA, right, kind of the bellwether for the AI play, that is still down pretty significant today. VST, which is uh, the utility that basically everyone's using as a proxy for powering AI, that's getting hammered today. So there is a lot of selling when it comes to the whole AI theme going on. However, because the small caps and the micro caps are doing okay, that just means that they are selling those names and they are buying other names, which our job as traders and investors is always just to try to chase the rabbit, right? Figure out where they're going next and go there with them. So that's kind of what I'm seeing there. So that's a just overall rant and idea about what I see in the market. Quickly, before I start getting into names, I'm going to just take a look at this, right? This is kind of a heat map of names that I look at stocks that I watch to try to gauge what's going on in the market. A lot of the stuff that you think would be up today are like consumer staples that are defensive, healthcare, which is pretty defensive, the stuff that isn't expected that are going to be kind of interesting, that I'm sure I'll see some names on, are things like FXI and KWeb. So these are China. China's doing fantastic because, right, if they did make a superior or even a comparable AI for a fraction of the price, then right that's going to be a huge benefit to them because the amount of profits they're going to make from that is going to be really, really high. So other than that, the things that are down the most today, WGMIs are Bitcoin miners. We have nuclear down as well because the idea is if they're able to do this with less power, then what are we doing all this nuclear stuff for? Bitcoin down a little bit, but I did want to show Bitcoin before we got into names, just because yes, down, but doing the same thing as the rest of a lot of the market, where we have some bottoming tails coming in here, right? So sold off a little bit and is now bouncing as well. So again, the end of today is going to be very, very important. It's something I'm going to watch as a technician super closely, because if we close up, then that could be a sign that this sell-off has been overdone and then we're going to reclaim it. If we close down and significantly down, I think it means that there's more downside to come. So yeah, the closing print of today is, in my opinion, the most important print that we've seen in some time. So let's start looking at some names here, starting with time. maybe TME. I think TME would make a little bit more sense with 10-cent music. I'm going to assume it's that because that time chart looked really weird. TME is doing a lot of what China's doing, right? And a lot of China is doing the same thing and is moving in this same way where we are consolidating after a big move higher, right? This is one of the strongest, this 10-cent music. If you are looking at China and you want to get involved in China, this is one of the names that makes the most sense to me from a technical point of view, simply because it's so strong. It's just, it's been doing great, so it could continue to do great. Um, that's generally speaking just the idea behind trend following is that trends generally persist longer than people think they are. So we're consolidating nicely here. The high end of this is 12.25. The low end of this is $10. So that's a pretty wide stop. So make sure you're just kind of doing accordingly. But yeah, break of this downtrend line, I think is going to be interested there. GSAT. GSAT Global Star. I don't know. This is one of those space type plays. Looks like. So when I look at a chart like this, I just don't see anything right now. This gray line is the 50-day moving average. Some consider a bellwether for health. If you're above the 50-day moving average, it's a healthy name. If you're below the 50-day moving average, it could be unhealthy. If you go to a weekly chart, that turns into essentially the 200-day moving average. You can see as well. So we are above the 50-day moving average. We are holding these gains. So whatever happened on these days right here, where we went from 95 cents up to $2, then that's great. Right, consolidating after that move is fantastic, but we are within a range, which would be this range right here. And then we're in a smaller range, right? Which is that range right here. So you're inside of a range, inside of another range. None of that's like super exciting to me one way or another, right? So this $2 big psychological whole number, that'd be an interesting one to play against. A breakdown here could be no bueno, because it means whatever this move happened, the market no longer cares about. It's no longer able to kind of hold that in. AI, the poster child for the junkiest kind of AI names. Now, this zone for AI, you can see I already have drawn here, I think is everything for this particular setup where it's talking $32, give or take, just because it was resistance back here in the past. It sold off when we got to that zone. Now we broke out of it. We've come back and now we have tested it. So big zone. Again, what I mentioned, the closing print, I also mean for individual securities as well. I think that is going to be very important for this particular setup, just because, right, you have this this closing area that's very important. Just like what happened in the markets that I showed, is we had this big dip early, and then we started to rally after that. So if that's going to hold true in the stock and we undercut this area right here, which would have gotten a lot of people scared, but we are able to retake that, then again, to me, that shows that there are some buyers. Because again, it's not the news and it's not the initial move or reaction that's the most important one. It is what happens next. If you have an initial reaction that's bearish, that's fine. The news event came out, shocked everyone a little bit bearish. That's okay. The question is, did they, in quotation marks, right, the large institutions, did they use that as a buying opportunity or not, right? So far in the market, we are seeing, yes, they use that as a buying opportunity. Uh, in this name, I would say I'm looking for the exact same thing, right? Did they use this crash down to support as a buying opportunity, or do they sell it into the close? So if we close above this low right here, which is like $30, then that this to me is interesting as a potential play on this support. That was this prior resistance right here. If that fails, then look out. Boot Barn. Okay, well, Boot Barn does not care about this sell-off. You can see some trades that I took way back here. Uh, really strong name, right? You see, the first thing that I do is I'd like to zoom out because I want to know, is this a stock that's in a primary uptrend or a primary downtrend? Just saying, is this something that investors are buying over time or are they selling it over time? Right? You look at something like AMC, they are selling this name over time. This is not something that I really want to be too invested in, and boot, they are buying this over time. So this is something that's interesting to me as well. Holding right near highs. Again, exactly, this is all healthy behavior. You want to see what happens. You have a pretty obvious level of resistance around 170, 171. When you're up at that resistance, doing very well from a relative strength point of view. So this is a concept in technical analysis you'll hear a lot. I'll just explain it a little bit for those who don't know, but relative strength just means what's going up the most, or the easiest way to spot relative strength is if the market's down, what is not down, right? What are they, again, quote unquote, the institutions, what are they selling and what are they not selling? That to me is a sane amount of data. If they are selling the names that I'm in, if your name is down more than the market is, then I think you have something to worry about. If something like Boot, where yes, it's down today, but just look how much compared to the S&P 500 that's, gapped kind of way down here, this is holding up really strong. So you have a nice primary trend. You have good, you have a nice primary trend. You have good, just relative strength in the near term as well. The one thing I will say, this line right here is earnings. So you've got a couple days. You got what, 3 days, three candles. So the 30th, that's Thursday. Thursday, you have earnings. So whether or not you want to do something right into earnings, that is entirely up to you. However, myself personally, it's not something that I would ever do. Right, I'm not interested um, in taking trades when I know there is this binary bet that is that can move things dramatically one way or the other, right? So for me, it would just be after earnings, but it looks good, right? Again, this 171 area is going to be the important area to watch. Beauty I love about all-time highs is that uh, if you want to know where shorts are in pain, they have to be in pain at all-time highs. Right? Instead of trying to guess, right? Like I love you go on some forums about meme stocks and they go, oh, the short float's really high. We got them right where we want them. And the stock's down like 90 some odd percent from all time highs. It's like those shorts are fine, right? They don't need to cover. Now, if you have something that's hitting new all time highs, again, you know that there are no bag holders because at all time highs. And you know that shorts are in pain because it's at all time highs. So they have to be kind of mathematically. So that's a good looking one as well. CLF is a Cleveland Cliffs that have just been falling off of a cliff, right? So cool. All right. So yeah, we'll do that after this. So yeah, Cleveland Cliffs just completely falling off a cliff. It's a downtrend in pretty much every respect. If we zoom out into the weekly chart, we have broken this prior resistance for a long time. We are hanging out right at lows. If we have this daily chart, you can see this has just been in a downtrend for a while. This red line is an obvious area of support and resistance up around $22. We hit that and we have just been falling. Another thing to watch is notice the earnings. It might be hard to see here, but here they made 18 cents a share. Here they made 11 cents a share. Here they lost 33 cents a share. Here they're expected to lose 44 cents a share. So you don't generally, you want to see the opposite, right? You want to see the company either growing revenues or growing future expectations or growing when it comes to just making money, especially for something like this. It's a resource kind of stock. You don't want to see the other bit when they are shrinking. So yeah, Howard, we have something from the CEO of StockTwits talking about energy, alt energy, so alternative energy stocks. Things that are probably getting killed the most because of this, especially when I went through the heat map right here. Again, you can see right at the bottom, we have URA, which is uranium. We have NLR, which is a conglomerate of, it's an AI themed kind of stock because not only has got the AI name or the nuclear energy names in it, it has the small nuclear reactors, those crazy guys, the SMRs, the NNEs, all that craziness in there as well. And they are at the bottom of the list, only being beaten to the downside by WGMI, which is our Bitcoin miners. So I'm taking a look here at all different energy names. I think you got to start with the overall energy ETF, which is your XLE. And your XLE has been just really range bound for an incredibly long period of time. Even with the things that have been going well in energy, nuclear, things like this, you haven't been able to get really any traction one way or the other in the energy space. Everything's just consolidating super sideways. Been a very hard trade for a lot of people out there. We are pulling back. I don't see any area of interest in here. We are stuck immediately inside of a range, just like we are with the SPY. Now, when it comes to some of the alternative energy, green energy, we can look at solar, we can look at water. I think the big one will be nuclear. Solar, I don't think I'm shocking anyone to say thing has just been dead for the longest time. This is kind of the most commoditized sector out there, other than maybe marijuana, where the race to zero to make things incredibly cheap worked. Right, solar is cheap to produce and cheap to put up. That doesn't make it for good actual plays. Eventually, this one's going to be some sort of buy the dip, and it will probably make sense to look at whenever the strongest names are in there, like the First Solar. I definitely don't think it's end phase anymore, but this is just kind of a broken industry as a whole. So what I like to look at is we want to look at specifically the power that is connected, the energy that's connected to this whole AI play. The theme has been nuclear energy, right? So again, URA is going to give us the uranium ETF exactly. NLR, I like. So shout out to, I guess, Van Eck here for this, because this is not only the nuclear energy, but it's also, again, the small nuclear reactors. Right? CEG is part of this as a larger nuclear reactor, but you have NNE, you have SMR, you have VST, which these are all AI related names when it comes to energy. So it's the second derivative of AI is these energy names, and this is just getting shellacked today, right? So as a technician, this is not the candle you want to see, right? Because just how I talked about how it was very impressive that with the S&P 500, we got this buying off the open, and I've got chart of the SPY down here, and it's not doing really much of anything right now, but you had this flurry of buying off the open. Now, when it comes to what you're seeing in NLR, it was the complete and other opposite. We opened right at the high of the day when it comes to, again, the pre market range, and then we just sold off. If I take off the pre market range, it's the same kind of thing, right? The day opened up and there was just sellers, and ever since then we've been pushing down. So this shows that we are rotating out of this extreme energy thing. Again, I haven't spent too much time focused on DeepSeek. It might just be one of those things where people are saying, yeah, we don't need the energy that we thought we needed to run these systems. So maybe nuclear isn't going to get the funding or have the systems turned on that it potentially could need. But this is bad for today. But this is why, as technicians, we like to step out, right? This is an ugly candle. I would want to see some buying into the close in order to get any sort of idea that this sell-off potentially be over. But we zoom out on NLR, and we're still just kind of smack dab in the middle of this range, right? So we've had this push off the bottom in September. We've just been consolidating, and that consolidation has continued, right? There is a really nice chart that I'm going to grab here from Todd Sowen, who did a really great job. I think I've showed this to you guys before, but I think it warrants another look real quick, and we'll just do this in presenter view. So this is just a chart again. Todd Sowen from Strategis, I think it's called, pronounced. And this just shows the different stages of a bull market. Right, year one of a bull market, you generally have a great year, and that's what we got. So the smooth line is the average of what happens in year one of a bull market. The dark blue line, the more volatile line, is what happened. Right, so this is August 2022 to 2023. We had this choppy market. Year two of a bull market, you have, again, generally not as good, but still pretty good. And then you have what we did, which was much better. Then year three of a bull market, you usually have this nonsense, which is to say a whole lot of nothing. So when I look at charts like this and I look at the SPY where we are now, um, use that one. When we look at the SPY where we are now, we're smack dab in the middle of the range. When I look at NLR, we are hanging out in the middle of this range. I look at URA, and we are still, even though we are at the lower of the range on URA, we are still in the middle of this range right here. So this, to me, just it kind of cements home that this might be the market that we are in for at least the short period of time, at least this year as well, where we are chopping into this prior range. The other ETF I wanted to look at is there's one clean energy ETF. Maybe I can find it here. Clean energy technologies. No, that's not it. But yeah, so that's going to be my main focus when it comes to those things. The other thing that was really standing out today was the sell off in XLU. So utilities have actually become an AI adjacent play as well. But just like everything else, long term we're stuck in a range. So, I guess high level chat with all you guys out there is if you find yourself really really panicked today, uh, take a breath, right? Zoom out a little bit like I'm doing now. We are still in the middle of a lot of ranges. So I don't think the market has said AI play is completely over. It's time to run for the fences. I don't think that's what's occurring at all. I think the market was a little bit overextended, maybe the upside, needed an excuse to pull in as well. These areas right here, like look how from the bear trap, right? I made a video on my channel and talking all about this bear trap that happened right here, all the way into what could be a bull trap. But look how what extended we are. I talked about this at kind of the top of the hour. We rocketed from the lows to the highs around 6%, just in a straight line. No stopping. So the fact that we're going to gap down 2% and we're going to chop around for a while, that doesn't really concern me too much, just because it, we needed this. So regardless of whether it was a deep seek or whether it was a Fed talking or whether it was something that Trump did or whatever it was, the market just looked like it was a little bit overextended and need to pull back. So again, if you're very animated today and you feel that and you feel the need to make really rash decisions about your portfolio, again, take a walk, take a deep breath, got a couple hours till the close, you'll figure it out. I'm just not as worried as a lot of people are. Again, as long as we're hard stuck in this range. If we break the low of this range, which is around 580 on the SPY, then I start to reevaluate. If we break the high of the range again, then I start to reevaluate. But right now, what I'm doing as a quant and a systems trader, I'm someone that has right back tested systems, and I let them kind of trade for me. I am putting most of my capital in revision to the mean and pullback systems that profit better off of volatility and less breakout and trend continuation. The other thing that I'll say, just while I went on this rant before I go back to tickers, while I'm ranting, is again, keep an eye on the IWM. The fact that the IWM was able to get green today in all of this craziness, everybody's running around yelling that the sky is falling, and small caps were able to go green. That's very interesting to me. Could mean that some of the unwind that's happening with the AI trade is getting allocated into different sectors, allocated into different places. It's why I spend a lot of my time having this open on my screen. Homebuilders up 2% today. That's amazing. That doesn't seem like the economy is coming to an end. It may just be a shift in theme, right? So almost on the rant. The S&P 500 is very, very much AI. The top like 30% of this is going to be AI right now. So just because AI may be selling off a little bit does not mean the entire market has to sell off, right? We can, and quite often it is healthy for us to rotate into different names, right? Lifeblood of a bull market. Rotation is a lifeblood of a bull market. So perfect world, maybe we do get some control bleed into the AI names, but then from there, we get a push into biotechs or healthcare or real estate or any of these other sectors. And for the average guy who's just buying and holding the SPY, he might not have the best time. But for us, and if you're here as a junkie watching me rant about the markets, I count you among us, then it's basically just saying that there's a lot of places that you can go. There's going to be new themes that pop up. Quantum computing might be dead, but maybe there's some other thing that just pops up out of the blue. That's our job, is to try to get, if the money is going to flow out of one sector, where is it going to flow back into? So back to looking at some charts. Boeing, I see Boeing here. Very, very strong recently, which is not something that I think you can say often about Boeing, but has been pretty strong coming into earnings here. Nice little bounce off. I think this is one of the reasons that the Jets ETF has been doing so well. Um, so these lines that I have here, this line right here is just the anchored VWAP from the lows. So this just says, what is the average market participant if you nailed the lows on Boeing and you started to buy? What's the average market participant? What's your price at? And when they came back in to touch that, that was defended. So it shows that there's some amount of algorithmic institutional buying happening in Boeing, which again is not something that you could have said for a very long time as this thing crashed from 265 almost in half, actually probably in half from its highs. So earnings will be super important, but this is just a nice looking bullish setup after this type of move. But you know you have to see what happens there. Someone mentioning SOFI, this to me is a little bit of a worrisome chart just because you had this prior resistance right here. We broke through it, everything looked great, and then we have gap down off of earnings. I don't think this is really related to the market too much. I think this is probably going to be an overall earnings surprise type issue and an earnings surprise. Uh, Generally speaking, you don't want to fight. You know, if the market gets really worried after they tell you what they're making or losing, that's something you want to notice. I think this, you know, $16, $17 area is going to be the area to watch. If we can reclaim that pretty quickly, then all bets are off. Everybody who shorted the earnings report is a little bit sad. Everyone who bought the earnings report, I think, is doing better. But it's this here as well. The other thing is the candle, right? So again, I'm not one of those guys who, as a quant, I've tested all of these things using insane amounts of data. Um, so when I talk about technical setups and everything, I want to make it clear that I'm not really talking about the voodoo behind it. So when I talk about this candle, you just need to know that all technical analysis is, again, is trying to gauge the sentiment of what's going on. If the thing's in an uptrend, people are buying it. It means every time it dips, people are buying it. That's why uptrends persist and continue to work. This candle, because it has that big topping tail on it, means at some point today, the market really made a go of it. Tried to rally up after this earnings report, tried to get back up to that $17 share area, and those buyers were rejected. And as of now, they're rejected with some force. Now, we have to wait for this candle to close, but right now, this candle is telling me that this issue right here, or this wick, meant that buyers tried and they failed. And when buyers try and fail, that's where I start to get a little bit worried. And I think there's a perfect example I just saw on the chart right here. Yeah, this was the last earnings report. You can see this candle looks completely different, the exact opposite. Sellers came in and they tried very, very hard right off the earnings report to sell SOFI down. It failed. They failed. They closed it at highs, and you can see what happened right after that. Again, not saying it will absolutely happen, just saying those are the probabilities. That's what the psychology is showing in SOFI right now. AXSM, Axum Therapeutics, holding near highs, right? It's all-time highs are bullish, right? You want to hang out near all-time highs, and that's what we're doing right now. We're hanging out near these all-time highs on this name. Does have earnings coming up, does lose money, but therapeutics companies quite often do. It's not necessarily a bad thing for them, right? They're trying to make something, but a little bit overextended in the short run. Right? You get a little bit aggressive here from $79 to a buck five, just in a straight line. That's quite a bit, so might be a little bit overdone in the short run. But great overall look, long look. Buying things at all-time highs have been proven to make way more money than buying things at all-time lows. KLUR, a lot of names I haven't heard about coming up, so we'll see. Uh, yeah, this one also looks great, right? So what I like to do is you have these themes, whatever this thing is. I don't need to know what it is, but just by looking at the chart, I know it's some momentum driven, very speculative thing. And stocks don't go from 33 cents to $5 without being incredibly dangerous and speculative. So make sure you know that, right? Make sure you're understanding you're trading a theme. You're not trading in an actual solid company that's got positive earnings and is making crap tons of money. There's some momentum theme that's going on here. So we had this nice little pop up, and now we are having a pullback after that. And that pullback is coming right into the 50-day moving average right here, and everything is holding pretty strong. So it's just whether or not the theme continues, right? Yes, you are up a lot from this 33 cents, but yes, you are also down 5 cents from here as well. So, you know, you just want to play when you're playing momentum setups, you have to play momentum setups, which means generally speaking, buying dips is not really what you want to do. you need to buy as the momentum is happening. You have to buy as the excitement is happening. Because when the excitement stops, that's where bad things can start to occur, right? Just look at any of the quantum computing names. I don't know if this is one of them, but I like Qubit, QUBT, right? This thing could stay in this range for weeks or months or years, right? So you're not generally going to get smooth trends out of things like this. You're going to get quick trends, things going up, things going down. You're not going to get smooth trends one way or another. So make sure if you're trading a momentum name, you trade it in a momentum type style. FEMY, nothing. That will be, well, this is a perfect example, right? This at some point was some sort of momentum type name. Now it's done absolutely nothing since May, like literally nothing. Hasn't gone up, hasn't gone down. It's been within like a 10-cent range. So there's no technical analysis you can do on this. You can only do technical analysis on things that people care about. And the reason for that is that you're, again, doing the emotion thing. You're trying to judge emotions. You're trying to understand emotions, right? So to do that, you need some emotion, right? And in a stock like this, it's just basing sideways. There's nothing until there's some sort of news event or earnings event or something like that that's going to kind of kick it in the butt and get it moving around here. NVIDIA. So, right, NVIDIA may be lost. You can see this black line had here was the all-time highs. I drew it when it made these all-time highs. We got right back to it to the tick, and then we failed entirely. Now we have all of this price action above us. And again, just going with sentiment and all of that, it's just telling us that if we have all this price action above us, that there's just a lot of people that are potential bag holders that we have to deal with, right? A lot of people that are just kind of hanging out at a range within a range, and we need to be reclaimed, right? Everybody who has shorted this area, thinking that the all-time high would not break and hold, they are doing well. All of the people that are doing the opposite are doing poorly. Everyone who has uh, not participated in that particular play, and anyone who bought expecting all-time high to break, they are losing money. So you have people that, if this thing gets back into the range, are going to be aggressive to sell because that's what they want to do. And also, shorts are going to defend this position. So until this zone gets reclaimed in a big way, for me, this is not a chart I would touch. This is broken support. It is trying to bounce a little bit, but you know, until it can, I'm not interested. Now, one scenario that would get me really bullish and probably buying NVIDIA on the close would just be if we just completely turned today and closed in this range. I would probably take that trade just because so many people are offside. I don't see that happening, especially it's already 12:30. I don't see that happening. But if that did, that's the one thing that would kind of get me really excited about this play. Otherwise, just kind of broken. And this is something that people are going to have to deal with, I think. If we are getting this rotation into small caps from the AI play, if the AI play is over for now, a lot of people are just going to have to, uh, some people, the smart ones, again, the degens that are here with me, need to find other trends to hop on. It's not going to be NVIDIA again, right? It's not going to be this again. NVIDIA can't double from here and be a $6 trillion company. Can it? I don't know, maybe. But if there are new trends to get involved in, that's just what we have to do. We have to get involved in those new trends and kind of let the past be the past, I guess. Baba. So talked about China at the top of the hour, right? Bringing up the heat map here. KWeb and FXI are on here somewhere, but they're doing very well. Full disclosure, I own a bunch of Baba. I'll always tell you, if I'm analyzing a chart, just so you know I am in some way talking in my book. I really, really like China as a whole for a second move higher. And the reason for that is if you just take a look at FXI, again, you had this massive pop and then just completely and utterly gave it back up. But we gave it back up to the breakout zone, right? We didn't go much crazier than that. We came right back to the area that we broke out of, and we just held there for a while, long enough that I think people kind of forgot that we had this crazy move, um, this crazy move up, and then just everyone just forgot about it. We didn't retrace all of it. We didn't completely fall back apart. Um, the we pull back a little bit. We pull back a pretty significant amount. Now, if we break out, so this line right here is the anchored VWAP from this spike high. The idea behind, again, these anchored VWAPs, it tells us what is the average price of someone who was doing some dollar cost averaging into China and pick the worst time to start, right? This would be the worst time to start buying China after this massive spike. And it's a good, again, sentiment indicator, because if the average person that did the worst thing is making money, then most other people are probably making money as well. If people are making money, generally the stock is going to move higher. So we're right up against that right now. So I want to see what happens over the next few days if we break through. BABA would move with the FXI because it's large cap China. So that same price on Baba is like 93. So if we can get through 93 bucks, that might be interesting. A big move in a straight line may need some consolidation, may need some digestion of that move. But overall, I like China. Therefore, I'm going to like a lot of these names that are in it. And it's one of those things that I like it because everybody in the world seems to hate it. So it'll be one of those themes that as things kind of slowly turn around, then I think that will be good. But until then, uh, you're going to have this moment where you're buying the thing that everyone hates. And then as it starts to move higher, you'll start to probably hear about it on CNBC and all of these different names. So I'm going to let the dog out. Sorry, let the dog out of the office there. Yeah, so this thing, it looks great, but remember, it's China. So the two things that I always kind of preface with China is that A, there's not a lot of trust there. And then B, a lot of what will happen is going to happen overnight. So if Baba comes out with some really good news, it will gap up massively overnight. If it comes out really bad news, it will gap down massively overnight. That gets harder to control your risk on. So you just have to make sure that you're sizing accordingly. If you're buying Baba and you want to risk 10% on it, you got to know that it can gap 20 or more percent, just like a biotech. So I kind of treat these like biotechs where there's going to be a crazy move that happens, and it's just important to make sure that you kind of account for that. And the only way you can do that is position sizing, because you can't trade it overnight, right? At least not yet. 24-hour markets are certainly coming, but you can't trade it yet. CORZ, Core Scientific. Yeah, that's not something you want to see. That candle right there. Um, this thing's been in a nice uptrend for a while. It's gone from $3 to 11. Let me just do a little. That's kind of interesting. We'll talk about that in a second. But this is just like kind of looks like NVIDIA's candle, where it's a bit broken, right? It was consolidating up near highs. It was in a nice uptrend. Everything looked great on this name. Something happened. I don't know what it was, but something occurred where everyone's like, okay, now we're selling this thing. So this is a pretty ugly candle, not something that I'd want to get involved in right away. However, we got this anchored VWAP. We got this anchored VWAP from the IPO. So essentially, just like I talked about the anchored VWAP being good sentiment indicators, this is one in which it's telling us that this is where the average person is that has been dollar cost averaging CORZs since the beginning of the life of the stock, since the stock started to exist, is where the average market participant is. And you can see a fair amount of times in which this came into play, in which you had, the here, just keep doing this, right? This was a big one, came back down, it bounced off this level. We're back to it now. So this anchored VWAP has been respected a lot. Doesn't mean it will continue to be, but I think if you're interested, it gives you a place to potentially take a trade at. So if we pull back and we hold this anchored VWAP and start to push higher, then it might be a trade that I'd be interested in taking. Not something that I'm just going to buy today, because whatever happened is still fresh, right? So I always give them a couple days just to see if everything kind of smooths itself out, because you have a level. So it's one of those, if this anchored VWAP is going to hold, that's sitting around 1050. So you could say 1050, $10. Maybe it comes down, the stock just chills out for a couple days. We'll just take the shot and then go from there, if you get that occurring. But the first day after a big down day like this, I'm not really interested, because it means some amount of news is dropped, and then quite often the other shoe will drop, and then maybe another shoe will drop in the direction of that trend, which right now is to the downside after that move occurs. So CAPR, another therapeutic, a lot of therapeutics type names out there. This one looks a little bit better to me, in which, we've had this big push up, and then we have a nice little, very basic consolidation. Again, I don't like to just look at any of these patterns and take them in face value. I don't think there's a lot of that makes sense. But what does make sense is you can just look at this and you can say price is consolidating. So something occurred to move this thing from $4 to 16 to $20. That got the market really, really energized, and now it's processing in, and now it's congesting, and now it's tightening up. And the two things that we know about price over time that you can study is that price trends generally persist. Things that are going up will generally continue to move up. Things that are going down will generally continue to go down. And volatility mean reverts, which essentially just means that if something is incredibly volatile, eventually it will calm down. And if something is becoming unvolatile, it's becoming very tight in its price action, it's not moving around, the standard deviation of the movement around whatever moving average you want to talk about is decreasing, right? Think of a coiled spring getting tighter. Eventually, that's going to change. Eventually, that will create some volatility in one direction or the other. So in this case, you would want to bet that it's going to resolve in the direction of the underlying trend. That because trends persist longer than people think, or else trading and investing as a whole would just not be possible. So it looks good. If it breaks out, I would wait for it to break out. I would understand it's a therapeutic stock, so it has as much of a probability of gapping back down to that $3 a share as it does as rocketing to $30 a share, because it's a therapeutics company. They're creating something, and if that thing is good, then it's going to skyrocket. If it's bad, it's not. So understand that technical analysis can only go so far, right? I'm not one of those things that says everything is entirely baked in. I understand that it just, if you're going to hold anything, if you're going to hold this name or anything like this name for a long period of time, at least just do a little bit of research to say, what are they building? When is their, trials going to be up for whatever they're doing, that type of thing. So you're making responsible bets on whether or not you think it's going to happen. If you think whatever drug they're doing is going to change the world and fix everyone, great. Just know roughly when that trial and everything's going to be done, and then you can go from there. So MCVT, yeah, this is another one. Is this right? MCVT, yeah. You can't do any analysis on this name. There are days here, and this is why if you zoom in, there are days here where this thing has not traded or has traded like one or two shares. So yeah, nice little gap up and consolidation. But again, charts and a technical analysis again only work when there is a motion to kind of play off of. In this game, in this particular game, or this particular stock, no one knows about it, and no one really cares too much, right? Or it would just be doing more volume. That's why most people you'll see when they're filtering out stocks or filtering out names have some sort of minimum volume filter. It's not to say that you can't buy and invest in names like this. It's just going to mean it's not going to care what the chart's doing, right? What's going to matter is whatever this thing is, this Mill City Ventures, whatever it's going to announce next, whatever the next thing it's going to do, it will, because there's no liquidity, it will go from the price it is to that new price. So say this thing gets bought out for $5 a share, it will just immediately go right there. Or they make more money in some venture or whatever, it will just go immediately there, because there's not amount of people that are going to trade it on the way there. It's gonna spike. Also, be very careful of just liquidity. I know we're all retail traders here, but there's nothing that sucks more than being in a stock, and sometimes it's being wrong, but sometimes it's being right. To be in a stock and being right about the trade, and you just can't get out because there's no liquidity. Uh, that's a pretty bad feeling. It's bad when you're wrong and you're trying to sell your position for a loss and there's no liquidity. It's really bad, and it sucks really bad when you're right. When you're, hey, I'm going to buy this thing because I think it's a good idea, and it spikes 10%, but there's just no way that you can sell that position because everybody in the world is ignoring the stock. So there is no sellers for your buy and there's no buyers for your sells, right? Be very, very careful. And then you know what it feels like to be a large institution, right? Where um, that's how they feel all the time. They probably have a lot of bets that they want to take but can't because they can't find someone else to take the other side of it. Less of a problem for us, but when I see a chart like this, it is absolutely the case. So feel free to come on in and post your tickers. I went through the entire list, but let's take a look at the market in the meantime to see if it's moved. I'll let it go for a little bit longer to see if there's any questions, anything anyone wants to go over. I don't think the SPY has moved since we started. So yeah, we are just consolidating here. So this is why I'm really going to focus on the close. Why I think the close is very important here, just because we have this nothing has really no one's really made a bet one way or another. We had the big push off the open. Buyers stepped in aggressively. If I turn on the pre-market session, buyers stepped in aggressively as soon as they could. So 7 o'clock came and everyone started buying up the market. But the old adage, which I repeat all the time because I wholeheartedly believe in as someone who worked in the hedge fund industry for 10 years, is the whole amateurs open the market and professionals close it. And the reason for that is that if you're a professional investor, you're a institution, you're a hedge fund, you're whatever you are, you're not really worried about taking that trade. And you can't just take the trade during the chaos right off the open. You need the market to calm down, you need the liquidity to kind of settle in, and then you can start to place your trade. So what happens is quite often after big events like this, you start to see a consensus build across institutions that say, okay, you know, we're going to buy this thing now, or we're going to sell this thing now. So if we close down here at the lows, then I think there's probably more downside to come. And what will happen is we have to see what happens if and when we test these lows that we had this bear trap in that got everyone involved. Under that, I'm going to be in a lot of cash. We'll just put it that way. If buyers just dig right in here and they start to rip us higher, the way we have been accustomed, which has just been the way it's been going for a long period of time as people have been aggressively buying, then you got to join them. You got to get involved. But right here, I talked about these candlestick patterns and the bottoming tail and the topping tail. The bottoming tail is just telling us that buyers came in, and then the topping tail is that sellers came in. So this is what us nerds call a doji candle, and essentially just means you are opening right where you've closed, um, or you're closing right where you've opened, but you made a big move up and a big move down, and now you're right back in the middle, which just shows no progress in either direction, right? You haven't, the buyers didn't win, the sellers didn't win, the bulls didn't win, the bears didn't win. Essentially, nothing occurred. But you had a big fight in the middle. Um, just represents indecision, right? You don't have to think too much about it than that. Is that indecision, and indecision can sometimes happen at turning points like you see right here. This would be considered a doji or a spinning top style candle, and then that was the top of that little move before things reverse. So doesn't have to, can. So we got two more here, and that will probably take us to time-ish. So the Qs, same thing. Now the Qs are relatively weak to the SPY, and if we look at the RSP and the IWM, there's a theme to be had here. So let's just chat about that. Understanding how these indices are made up is very, very important, right? Qs, obviously tech heavy. That doesn't shock anyone, right? That the NASDAQ technology index is full of technology, but it's a cap weighted index. So what it means is that the bigger the company, the more effect it has on the actual company itself. So this just means that it's going to be led by mega cap tech because they're the biggest names out there and they're technology, they're in the index. Um, so this is going to be the most affected if we are getting some sort of AI unwind play. It will be hurt by far the most of that because it's going to be more weighted to those AI cap names, right? I hope that makes sense, right? It's just going to be the one that's affected the most. But what we want to look at, under the hood, is first good place to start is QQQE. So QQQE is the same names that are in the NASDAQ, except as opposed to being cap weighted, it's now equally weighted. And this shows us what is the average stock in the Qs. What does that look like? That's doing a little bit better. So it's showing us that there is some strength under the hood. It's just not in large cap tech. Same if we look at the S&P 500. This is the chart, burn this into your brain for a second. The S&P 500 is also cap weighted. So those big names are going to move the S&P 500 more than the little guys. If the top 10 names of the S&P 500 drop like a stone, but then the other 490 names rally, the SPY could still go down because it's right, those big names are controlling everything. You can do the RSP, which is the equal weighted version of this S&P 500. It's basically saying what is the average large cap stock in the S&P 500 doing. So the S&P, it basically takes a lot of that technology out and is saying, okay, well, what's happening to home builders and consumer discretionary and staples and these other sectors where it's removing that mega weight that a lot of the large cap is doing. And you can see this is doing okay. It's almost green on the day, down only 0.3%. So the SPY, the big cap guys, tech guys are getting hammered. The other ones are doing okay. The average stock is doing fine. So what you kind of take that information. The reason that we compare a lot of these ETFs and these indices is just to show us, okay, where are people getting hurt? People are getting hurt if you're in big cap tech. If you are in home builders, if you're in any of these other names, you're doing okay. So if you think that trend is going to continue, to go to the question of the Qs, that's going to be the hardest hit index for sure. The QQQ will be the hardest hit ones. If you're looking to buy some indexes that you want to think are going to do well if this rotation is continuing, then right, your RSP, your QQQE would be better for that. All right, last but not least here, FSTR, LB Foster and Company. Just overall great looking chart, right? At highs, this $28 area is huge. You can see this going all the way back till 2019. So 2019, it hit it, sold off, came back in 2024 to anyone who believes that price doesn't have memory, hit that really closely and then fell apart. And now we're back there and just consolidating at it. Big looking cup and handle play, just beautiful chart. But the thing that I want to keep an eye on more than anything, it's a little bit of liquid. Again, I can just tell by looking at the candles. The liquidity is not super good, but I want to talk about relative strength, relative weakness is kind of my closing thoughts. This is the kind of day to look at names like this and say, this name doesn't care that the market's selling off. It is down a little bit today, right? It's not up, it's down 1%. But if you look at this in context of this, right, SPY is gap down and it's down under 4 or 5 days worth of price actions. This FSTR is holding right near highs. So again, you don't need to fancy numbers. You can just eyeball it, say this is relatively strong. That is the exercise that I think I'm going to leave everybody with today, that I think is the most important thing. Again, if you're a little bit jacked up right now because the market's going crazy, that's fine. I think an actionable thing to do is two things. Go through your holdings. Anything that has just gotten absolutely clobbered, even maybe worse than the market, that's something that you heavily want to think about and evaluate and say, do I want this in my portfolio? Because it is relatively weak to the market. It got hurt harder than the market did. Anything out there that didn't, anything out there in your portfolio that's green today, that's something else that you want to take a look at. You want to say, why didn't they sell this? Is this potentially a position that I would be interested in adding to? Is this a position that I could see doing well? Because whatever happened, the institutions did not go after this. They did not throw this baby with the bathwater. Same thing when it comes to trying to figure out what to buy. A very simple exercise today, I think, would be to take a watch list, just like I've done right here, and just sort it by what's up, right? You could grab the whole, we can do not, you could do the whole S&P 500, right? And you can grab these numbers anywhere. You could dump them into Excel. You could do all kinds of stuff with this. You can just find the entire S&P 500 and just sort it by things that are up or down the most. Just trying to find, can I actually just do the whole, S&P 500 index. So here's the whole S&P 500. I'll sort ones that are up and look at that, right? Again, you don't need crazy technology in order to do this. You just need to grab every name in the S&P 500, the Dow, the whatever it is you want to grab, and just start going through them. AT&T hitting new all-time highs. HCA Healthcare is doing fantastic. CBAC is doing well. This is just going to say when they sold off the market, they did not sell off these stocks. Doesn't mean you just buy them, but it means this is a great place to go fishing. It's a great place to try to look for names that are relatively strong. Because if the market digs in and recovers, then it's basically saying these names did okay with that market pushing them down. So if they did okay then, maybe they'll do even better if we do get that lift. So I think that is my time. I appreciate everyone for coming by. I appreciate everyone for hitting the like, the retweet, asking questions, all the kind words. Very much appreciate that. I just get to stand here and rant, and there's some people who actually listen to me. So I appreciate it. Everyone, calm down, take a deep breath, go for a walk. I'm sure everything will be fine. Knock on wood.